house. What a show. Just want to give a quick shout out to the guys at Bitcoin Amsterdam, Bitcoin Magazine. What a first day. Give a round of applause, please. This has been awesome. I'm Dylan LeClair. This is Jack Mallers. We're going to be talking about the orange coin. We're going to be talking about Bitcoin. Keep it loose, keep it casual. I guess to start, do you want to introduce yourself, I guess, before I jump the gun?
What's up, Europe? It is never beyond me that we're all working on fixing money together, and I get on a flight that's 8 hours, and when I get off, there's so many people that are all rallied behind one mission. So I'm stoked to be here, and my name's Jack, and I've been in Bitcoin for a while, and I think if we can fix the money, we can fix the world. And I'm pumped. Thanks for sitting down with me, buddy.
So let's set the stage a little bit. It's 2024. ETFs roll out at the beginning of the year. We have, looks like banks are going to be getting approval to custody Bitcoin. These are things that have been discussed for a while. On one hand, it looks like, the left tail risk, if you will, of Bitcoin, the zero scenario probability is gone. I think people in this room are Bitcoiners would acknowledge that a long time ago. But that's now starting to set in for like the suits, if you will, the TradFi allocators of the world. But on the other hand, maybe the cypherpunk ethos or some of that, kind of like anarcho-capitalist, that thesis, some people have said, some of this maybe puts that into question. So I guess how are you evaluating this landscape? How are you thinking about things? Is this always the inevitable path? This kind of hyper-financialization of Bitcoin, options rolling out on ETFs and banks custodying, or is this something to maybe worry about? I guess just what are your thoughts on it all?
Like worry with the ETFs and stuff. No, I don't have any concerns. I'm excited. I think of Bitcoin as money, and money being the market good that you acquire to save and exchange your time, your energy, your effort, your labor, right? So a cheeseburger is also a market good. An airplane is a market good. You get on the airplane to travel. You consume the cheese, or you acquire the cheeseburger to consume it. You acquire the money to store it and exchange it later. It's the technology we use to take our effort today and bring it to tomorrow. And so that's what Bitcoin is, plain and simple. That's a technology that all humans need, both on Wall Street and those that are at the cypherpunk manifestos in San Francisco. So it's permissionless money, so no one's allowed to tell anyone they can't use it. And so my expectation is if you are a human being and you need to store your time and energy, and you need to save and exchange it for things that you're naturally going to use Bitcoin. So I think it's inevitable in that respect. I also think for those that feel threatened by Wall Street, there's a very nuanced, we should be thankful for Satoshi Nakamoto for all sorts of reasons. One of the more impressive, in my opinion, is how Satoshi launched Bitcoin. I'll say it that way. In that Satoshi Nakamoto did not take Bitcoin to Goldman Sachs to take it public. Satoshi Nakamoto did not list it on the New York Stock Exchange. Satoshi Nakamoto didn't put it on Product Hunt. Put it on an email list and just leaked it. And for that reason, Bitcoin is owned by all of us, by the people. So over half of the gold supply is owned by governments and central banks. I think governments own only 4% of the Bitcoin supply. You've got Michael Saylor, who's borrowing as much money as a human being could possibly borrow. This guy's got billions of dollars of debt, and he's trying to own as much Bitcoin as he can, and he's barely eclipsed only 1%. And so the mere fact that Bitcoin is not concentrated, if Satoshi said, hey, Goldman Sachs, I created a really interesting money, I want you guys to help me take it public, we'd probably have a more concentrated supply. It's the fact that you can custody it in your brain, it's weightless, there's no cost to store and hold it, it's global, and the distribution was through mining, through energy, and through leaking it on a mailing list. There is no threat. I mean, Larry Fink can try his gosh darn hardest and maybe get 5-10% or something, not nearly enough to matter. I mean, you need to own majority of an asset class to manipulate it, to price suppress it. So the fact that we all have it, Satoshi, I think that genius is lost on many, is that we were able to distribute Bitcoin to the people in a sufficient way, which protects us. Sure, Wall Street wants to buy it. Welcome to the party.
Love it. One of the things I was having a conversation earlier today, and we were talking about Bitcoin as a treasury asset, and the public company story and what Saylor has done. And there was a question from the audience at the end of our Q&A in the deep, and it was about private businesses. And so, hey, you're talking about this equity dilution and convertible note stuff and, kind of this like esoteric corporate finance world. I own a bakery. I want to stack Bitcoin. What's the model there? What's the strategy? What's the playbook? And I think it would, one of the things that I thought was very insightful that you shared, I think on a podcast or whatever it was, I saw it on Twitter, you were talking about at Strike, the decision-making process, like hiring a new employee or making this infrastructure investment. Like starting a startup however many years ago from Zap to Strike all the way to today, how has your thought process and mental model as a decision maker operating on a Bitcoin standard changed, evolved, developed over the years?
Yeah, well, Bitcoin is a real cost of capital. The analogy that I use is kind of weird, a little dark, but whatever. The analogy I've used frequently is the guarantee that Bitcoin has a fixed supply and you can't print anymore, to me is very similar to the guarantee of death in a human life. And the reason I think that analogy is helpful is because time as an asset generally is infinite time in theory, but my time is scarce and limited. And it's the promise that I'm going to die and that I can't live forever is what allows me to value my life. If I could live forever, I'd get married in 100,000 years. I'd think about having kids in 1,000,000 years. I'd go to the gym in 10 million years. I wouldn't eat the steak and the vegetables tonight. I'd eat the donuts and the pizza, and I'd focus on that in 10 billion years if time was infinite. But time's not, and I'm going to die. So I want to catch sunsets, and I want to reproduce, and I want to be a dad, and I want to be healthy, and I want to be useful. And so it's that finite promise of death that allows me to value my life. Now, if you take that and bring it to money, whether it's monetary energy with Saylor, or however you think about it, if there's infinite amounts of dollars or euros or pounds and paper, how are you supposed to value the paycheck that you get today? If they can print infinite amounts, like as if you could live forever, then nothing's valuable. And so Bitcoin as a finite promise, it actually allows me to not only value my paycheck today and the money I have now, but it's this idea of opportunity cost of should I go spend unlimited amounts of money on marketing, hire tens of thousands of employees, launch tens of thousands of products. In a fiat world, sure, why not? Zero interest rates, unlimited venture capital, and it's all about top line growth, print. But if you introduce the promise of you can't print any more Bitcoin, the promise of death, the way we think about it at Strike is Bitcoin averages annually 63% over the last 10 years. And so we use that metric of, is what we're going to do as a business, are we going to be able to beat 63%? Because if not, it's not worth it. right? We actually have something we can measure our business against, a real cost of capital, because capital isn't this thing that governments print out the wazoo that's a worthless piece of paper. Capital is actually accretive to our shareholders. It's beneficial to store on our balance sheet. Building a big capital base is actually useful. You hear Michael Saylor talk about having $500 million of cash was just a melting ice cube. But having $500 million of Bitcoin is a strong capital base you could change the world with. And so that's our approach internally, is it's a real cost of capital. We try and measure that cost of capital, whether we take the average annual return over the last decade, over the last 5 years, over the last 1 year, and we make strategic decisions. But what that's done for us is we're not nearly as big as other startups people-wise. We stay lean people-wise. We stay focused product-wise. We only build things that we know people want. We only build things that are sustainable. We operate profitably, and we care deeply about that, and that we think we want to be net producers for the world. We want to, in Bitcoin terms, we want to do well. We want our shareholders to outperform Bitcoin by owning Strike shares. And so you got to be a net producer. You got to, have sats flow, as they say. So it's changed us entirely. But I really like, if a business was living as if they were never going to die, the business equivalent of they'd eat donuts every day. They'd never think about relationship and being useful and meaningful and taking care of themselves, right? So that's changed us. It's like meaningful life, cost of capital. Does that make sense?
Yeah, that makes a ton of sense. I'm curious, when you start to talk with the TradFi world a bit, whether it's investors or just institutional kind of road shows and whatnot, whether it's a Series B, Series C round for Strike or whatever it looks like. Over the years, especially post, I would say 2021, 22 maybe, kind of that unlimited venture spigot kind of turned off. You have companies like the Uber model of never making a profit throughout the entire company history, but it doesn't matter because you can raise enough money and just burn it and keep growing in relative market share. So I'm curious, how is that's been the Strike way of thinking, your way of thinking for years. Has the perception from investors or maybe fiat VCs, as you would call it, maybe 5 years ago or 4 years ago, looking at what you were just said and kind of it's almost like bewilderment, confusion. What do you mean you don't want my money, or what do you mean you're not going to spend X million on marketing? We'll write the check. Has there been a recognition that this was always the correct path, or this is the correct economic calculation, or is it still it's what is that guy talking about?
No, I think times will change. I think the COVID bubble was not a one-off event. I think it was very meaningful in setting the tone and direction for currency debasement. I mean, the amount of big tech layoffs. So following the fiat COVID bubble was the fastest rate hike ever in that short time frame, and that crushed a lot of these businesses. And so you saw massive layoffs throughout the world. You're still seeing them. You're seeing this almost dual economy where there's still recessionary tendencies that live with us today. And with gold, if you're going to see bullish gold in the face of a hawkish Fed, to me that's the world is saying, we think differently now. We value differently. You wouldn't own a rock that doesn't give you any yield and doesn't produce anything unless you changed your opinion on how things worked and the confidence that you had in stuff like the S&P 500 and these growth companies. And so I think ventures changed entirely. And I think, tech and businesses. I mean, people give credit to Elon Musk, for example, and how he reorged Twitter and fired a lot of people, and he deserves credit. But I do think that was a microcosm of a larger story of people realize, wait a second, printing money for growth isn't growth, right? Like the analogy I gave on a podcast recently is, if your metric is, I'm making a lot of new friends, but you leave out the part of how much money you're spending on those friends to hang out with you. So it's like, that's the debt to GDP, right? If you're just focused on GDP, the American economy is doing great. It's going gangbusters. But if you include the debt part, which is like how much are we spending for that growth? So I think it's changed. I think venture capitalists and investors value net producers, profitable businesses. I think also for folks that are interested in our company, it's measured in Bitcoin terms. It's the amount of Bitcoin you own going up. And are you able to build products that outperform Bitcoin growth-wise? And are you able to build products that produce more Bitcoin as far as sweeping cash flows? And I think shareholders are getting, in venture and stuff, are getting more attracted to that idea. And I will say real quick, I think it's important just morally and ethically. Like at Strike, we think of things like profitability as a moral imperative before a financial one. Obviously, it's the only way to have a sustainable business. You can't change the world bankrupt, so you have to finance your business and your products to build for the future. But, we want to be net producers for society. We want to do more for the world than we consume from the world. And another way of saying that is being profitable, right? Like the value that we give our customers, we want to spend less producing that value. That's just like by definition making the world a better place. And so I'm hopeful that with Bitcoin adoption and in a lot of like the fiat debasement and stuff reaching a ceiling, that companies get back to that imperative of like, you're here to produce more value for the world than you consume from the world. What good is a company if the company is consuming more than it's producing? It shouldn't exist in the free market. And so, I think everyone at Strike, we like take pride in that, like, we're all here to make the world a better place. And you can have different definitions of that. Financially, that means profit, right?
What a radical statement. So you guys just rolled out in Europe a few months back. I'm curious. The EU is on the euro. Another question I got today that I would say I've changed my views on a bit is the timeline of hyper-bitcoinization and a full unit of account, medium of exchange. I think like the store of value thesis is as strong as ever, and not that the other two aren't, the other two use cases, but being a little bit naive to the world a few years back, I would have said this is happening next year or in the next 5 years. But rolling out in Europe, kind of the bureaucracy of the EU. I mean, we have the same problem in DC, no doubt. But I guess just how do you think about the transition from, like, we know there's a problem, there's a massive problem. Arguably, I would say it's the biggest problem in the world is this cost of capital is mutilated, centrally planned, bloated government economies. It won't last. It would fail outside of Bitcoin existing. Bitcoin is now just this engineering solution that exists. How does a billion Westerners, never mind the developed world, which is obviously even the medium of exchange and unit of account thesis is very strong there, but what is this in your mental model, like this transition period? Obviously, I mean, you're building your business out to service the transition, but I guess just how do you think about timeline, and how do you think about how smooth or not the transition is?
Yeah. I think what I can speak to is just my transparent experience building Strike. I think a lot of the timing stuff for Lightning and the medium of exchange piece, I think I was early and I got wrong for sure. Strike is my first real entrepreneurial endeavor at any scale. And, sometimes I say it's like my first real job. I did have a job before Strike. Debatable if it's real or not. That's a different story. So I give that context to say when I started Strike, I really thought the job of the founder and the CEO was to kind of predict the future. And I figured, it makes a lot of sense for Lightning to disintermediate these things, and it should, in theory, play out in years, like you said, as opposed to decades or anything like that. And what I realized in building Strike is that my job is actually to just like shut the fuck up and listen to customers and just listen. And, you know, the reality of what we've seen at the business is we're living through a giant wealth transfer, right? You've got pools of capital in real estate and equities and collectibles and art and gold. And that money is cycling out and into Bitcoin. And that's the main product that people want. And what customers wanted from us is, you know, Bitcoin is the opportunity. But BlackRock is an asset manager. Coinbase is a crypto exchange that for the life of them can't seem to focus on Bitcoin at all. Fidelity is a traditional brokerage service. It's like, who's like focusing on Bitcoin for the world and giving financial services for this wealth transfer? And that's all customers wanted from us. And when we kind of slowed down and we just listened, and we were like, oh, people want us more accessible in more markets. They want a focused, high quality Bitcoin product with amazing technology, and a company that isn't focused on the exchange and the speculation, but financial services. Because what we see from customers is Bitcoin becomes more a part of your life. Like our customers usually buy shit coins on some exchange, then eventually they get orange pilled, eventually they fully understand it, then Bitcoin doesn't become 1% of your net worth, it becomes 10, 25, 50, and you want a financial service to work with you over the next decades in transition, and that's who we've become. And so my long answer is I don't like to speculate on the medium of exchange stuff anymore. I've really changed to just, you know, trying to listen to customers and let things play out with time. You know, we try and be licensed and regulated and available with amazing technology in as many markets as we can, so that whatever customers need from us when it comes to Bitcoin, we can be there, and we can do it at extreme scale with the best quality in the world. And so, yeah, we don't speculate on that stuff anymore. I mean, the Lightning stuff for us grows, but the primary business right now is customers buying a lot of Bitcoin. It's the brokerage, it's the wealth transfer. I love the Bitcoin equals technology plus fiat liquidity. And right now we're dominated fiat liquidity piece. We're living through really unique times of currency debasement. I think Bitcoin's the best expression of that. And if you're going to change consumer behavior at scale, people are changing at scale the way that they store money and wealth and assets a lot quicker than they're changing the way they use Apple Pay. So I don't know if that was the answer you were looking for, but that's just the truth.
No, that was a great insight. I'm curious, like on the actual tech itself, on the Lightning rails, and there's a bunch of kind of second layer ideas going around. How has your thoughts evolved on, or just general thoughts on Bitcoin scaling through custodians, scaling through layers? Has that changed meaningfully in the last few years, or is it more the same?
No. My thesis on Lightning remains, which was, or just, Bitcoin more broadly is an open value transfer protocol for the world, is the way I liked to think of it. And if you can have an open value transfer protocol that's able to achieve near instant and near free finality, that's tremendously disruptive. Like, just pillar by pillar, you want to compare that to card networks, to settlement networks like Swift, it's just better. And so to me, there's been no production at scale competitor to Lightning. I feel as if Lightning has failed or has had major issues. I think the word success is so difficult in Bitcoin because it can carry so many different definitions depending on the room and the context. Like, if for you, success of Lightning is 8 billion people with a non-custodial wallet on their phone, no, it's not successful yet. But if success is you can have value on someone's balance sheet transferred in less than a second and for free to someone else's balance sheet, like real bearer physical value, Like, it does that at any scale, and it does it better than anything else in the world. Is that success? You're going to sit here and look me in the eye and tell me that's not an achievement? Fuck off. So it's just like, I don't know. Try not to get distracted by it. The thing that's challenging is, again, it's like solving a consumer problem. So, okay, you've technically achieved something in payments that was previously impossible. Physical, bearer, global, settlement, way faster, way cheaper. But, you know, where's that applicable to disrupt existing industries? Monetize it and change consumer behavior. We've seen the most success in cross-border payments. It's very difficult to change consumer behavior when they check out at a grocery store because of the way card networks work and interchange and the incentive structure and the monopolies or duopolies. Cross-border payments, there's a lot more natural friction and pain, and the benefits are a lot better. But still, it's a lot easier to sell someone Bitcoin that's living through the greatest inflation levels even in New York City than it is to sell them on a new way to do cross-currency payments.
Yeah, makes sense. And I wholeheartedly agree with you. What does it look like, you know, on a longer time frame, you know, these card networks like Visa and MasterCard and American Express and, you know, whatever, you know, are essentially rent-seeking 2 to 3% of every purchase in the Western world. Disintermediating that monopoly is a tough task. But is it just pure market forces that does it on the long term?
Yeah, so the problem, we've got like 10 minutes, so I'm not going to use it all talking about Visa. They don't deserve that. But the problem is, the way that the relationships work is Visa monetizes, or any card network, they monetize what they call the acquiring side, the merchant. And so the merchant is the one, as we all know, that's paying these rent-seeking prices, 2-3%. But then what they do is they work with the banks, they are the banks, and that capital goes back to the consumer. And so the consumer is getting free Napa Valley wine, access to really nice lounges in every major airport. They're getting free flights across the country or across the world. It's the merchant that's in a lot of pain. So you can go to any merchant and say, hey, there's a cheaper, better way to accept any currency. It's just on an open source network. They're going to say, I love that. But if you say, okay, now consumer, the issuing side is what they call it. You now have to walk into the grocery store and use a network that doesn't give you free wine and free flights and free access to all these VIP experiences. They're not going to do that. And so the challenge is, how do you change that consumer behavior? And, you know, it's very difficult, and you can do it with lots of marketing dollars and lots of pushes. And by the way, this battle is not only fought in Bitcoin. You have things like Cash App Pay, or, you know, Venmo has their own checkout, where they're subverting card networks, and they're trying to find a way to incentivize the consumer, because if Visa and MasterCard isn't in the flow of funds, everyone wins, right? There's the same size of pie with less people eating. So of course, everyone is incentivized to get them out, but it's how do you get the guy or girl that's checking out at the store to use this network and not the network that just pays them to use it. So merchants are the ones footing the bill, and they're basically paying consumers to use this one with free wine and points and stuff. And that's the challenge. And so I think we all philosophically want Lightning over Visa. Merchants would love that. You'll never meet a merchant that says otherwise. But it's at scale. How do you convince people to sacrifice all the free shit they're getting? And it's a hard problem.
Hard problem indeed. Thanks for the insight there.
Yeah, a little history 101, card networks.
All right. Well, so 3 years ago-ish, three and change, you in the Miami stage helped to announce that El Salvador was making Bitcoin legal tender. Was about 6-8 months after MicroStrategy adopted Bitcoin as a Treasury reserve asset. Now there's this kind of political football being thrown around in the U.S. on Trump has given some lip service to Bitcoin, but as you look onto the horizon, is there anything that you are looking at or thinking about that is the obvious step or catalyst, or I don't want to say narrative, but is that when we look back in hindsight, 2021 for me, that the conference Bukele, even if El Salvador was it's only a small country, it's only a small NASDAQ listed company. It's what are we looking at in the next couple of years that in hindsight is as a sort of a cataclysmic sort of event?
Well, I think Bitcoin's the best expression of currency debasement. Bitcoin equals technology plus fiat liquidity. So I think a lot of the growth is driven by the destruction of fiat, is the level of deficits and the debt spiral that I think we're probably already in. So I think that's the net catalyst, the overall catalyst. If governments wanted to slow down the adoption of Bitcoin, they could spend less and go back on a gold standard. It wouldn't kill it, and Bitcoin would still win, but probably slower. So the pace at which this is evolving is entirely driven by the destruction of the currency and the debasement of the currency. And I think Bitcoin is literally the antithesis of fiat. It's the best expression. If you want to see how bad fiat really is, pull up a Bitcoin chart. Don't look at the CPI. So that's on net. What I think about it, what I think is interesting about America, with El Salvador, it was a huge deal that a nation state, that a country removed their relationship with the people of money. It's literally the separation of money and the state, and which is why I think a lot of us in this room are interested in Bitcoin. And really, at the end of the day, money is our time and energy in an abstracted form. I talk about it's human effort, it's labor. We all get up, we do stuff, and in return for that, we get money. So by proxy, when a government debases our currency, they're debasing you. Not the money itself, but all your effort, all your time, all your energy. Money, in theory, should represent your contributions to society in a perfect system. And so the fact that El Salvador said, we don't want to have an influence on that relationship. We don't want to be a part of that relationship. We want that relationship to be up to the free market. Because when the U.S. government debases the dollar, they're debasing me and all the time, energy, effort, and labor that I've put into my life in acquiring these dollars. So the fact that El Salvador did that's why it was a monumental step. But they didn't have the ability to print their own currency. They lost their own currency in their own civil war. They were on the dollar. And so I think the next big step would be if a government that has the ability to print and debase and uses a central bank to manipulate and control and influence the time, energy, effort, and labor of the populace and of society, if a government that has that power is able to buy Bitcoin and acknowledge it, not even the legal tender part, just acknowledge it, own it, and validate it, that would be a huge deal. And I actually think the United States of America is probably in the best position to do that, and where I think they're the most likely candidate because they have the world reserve currency. The U.S. is we're broke. We just issued debt. We're being the world reserve currency implies that we run these massive deficits and we issue all of this debt, right? And so we are the most incentivized to actually start backing our future promises with something real. So I told, my chief of staff is somewhere in the audience. I told him, after El Salvador, people would ask me, what's the next? Is it, Guatemala, Argentina? Everyone was looking on a map, looking through Latin America. I said, it might be the United States. Bitcoin's very American. And the United States, in theory, is technology, innovation, inclusion, equality. Every node on the network is treated equal. You can come and go as you please. So maybe I'm manifesting a little bit. Maybe this is less of a prediction, more of a hope. But I think that would be a really big deal. And as big of a deal as El Salvador was, the next step would be a government that actually can print their money and debase the populace through money printing. If they were to say this Bitcoin thing's legit and we should have some, I think that'd be massive. Yeah,
no, I agree with you. That's like that's escape velocity, right? It's like you can't really turn back from that. I think it's also interesting. Like even if it wasn't explicitly borrowing money, buying Bitcoin, it's like dollars are fungible, right? So that you're running a massive deficit, you also are acquiring Bitcoin. Like that is indirectly, you're indirectly borrowing to buy Bitcoin.
Yeah, well, I think Lummis's proposal is super interesting in that she's not necessarily proposing that we print a bunch of dollars to buy Bitcoin. She wants to take the excess reserves at the federal banks and reallocate out of gold and into some Bitcoin is the initial proposal. And to me, the proposal is like, listen, we have to start backing our future promises with something real. And we talk about Bitcoin 63% growth every single year. The U.S. is looking for growth. We're talking about debt to GDP, right? We're borrowing all this money without the growth to pay it back. With Bitcoin, you could literally like buy growth off the shelf. It's like, you just like, oh yeah, I'll take a sandwich, a Coke Zero, and that thing that grows 63% a year. And so it's like, we have a growth problem. We're not growing enough to back our future promises. And we need to signal to the world that we acknowledge and we care about these things. So yeah, I think I think America is very well positioned given the, reserve currency status, the deficits, who we've been as a country, to lead that. And I think a lot of people are looking for us to make that move as well. So we'll see. But her proposal is not to print money and buy Bitcoin, which I think is interesting. It's not as like destructive to the dollar. That would be pretty anti-dollar.
Yeah, I think just the rhetoric alone is strong enough to kind of catalyze this kind of game theoretic chain of events, right? It's like, well, if Trump is tweeting out at 1 a.m, we need Bitcoin to be energy independent, then, how many intelligence agencies around the world are going back to their, to the drawing board and saying, what did you just say? Like, I think that even if it's Trump or Harris or, whatever they promise as a politician doesn't end up exactly manifesting, I think in and of itself, it's a big deal. And so I think that's personally why I was a bit excited about it or thought it was a good step.
Yeah. I mean, again, I think of money as your time, energy in an abstracted form is a really important point, because if they're debasing the currency, they're debasing you. You get less housing, you get less family, you get less food, you get less gas, you get less energy, you get less life. And so when you look at KPIs, key performance indicators of our species, divorce rates up, obesity rates up, child per woman crashing down, population growth crashing down, and it's like the government can tell you all these things about future growth and how they're going to fix the deficits and everything. You can't print 18-year-olds. It takes 18 years to make an 18-year-old. And so we want people to be having more kids. We want people to be living longer. We want people to be healthy. We want people to be married. And so I think these all have to do with the money being broken fundamentally and the government's ability to debase us through currency printing. And so if the United States were to acknowledge Bitcoin, support it, own it, and we would have a sitting president or government or whatever that supports the industry, I think as the world reserve currency issuer, I think that'd be as big a deal as I could have ever dreamed of when I got into Bitcoin, for sure.
Amazing. Fix the money, fix the world. Well, we are running out of time. I want to thank Jack Mallers for the inspiration, insights, and the chat. This was a lot of fun. Thank you, guys.
Thanks, buddy.
Welcome back, everybody. We are here at the Bitcoin Magazine news desk here at the close of day one of Bitcoin Amsterdam 2024. I am joined by none other than George McHale, General Manager of Bitcoin Magazine, and Alan Helm, Head of Product at Bitcoin for Corporations. Alan, I want to start with you. Let's get a quick recap of what we saw today.
Yeah, first off, to our U.S. crowd tuning in here, definitely go back and check out the replay because we had a lot of great talks today. All the usual suspects from all the industry players, the institutions, the miners, and that sort of thing.
Yep.
But we're here at a sold-out crowd. The venue's been popping, so we're super appreciative of everybody that came. And I really wanted to talk about, one of the big announcements that came from our very own company, Bitcoin for Corporations, because it's been a lot of buzz. George, why don't you run us through the announcement that you made just at a high level for anyone who missed it?
Yeah, definitely. So it was a lot of fun. So 3 months ago at Bitcoin 2024, we announced our partnership with MicroStrategy, and today we announced the official launch of Bitcoin for Corporations. So it's live, b.tc/corporations. And basically what it is we're accelerating corporate Bitcoin adoption. So any company, especially publicly traded companies that are looking to add Bitcoin to their balance sheet or already have added Bitcoin to their balance sheet, we're equipping them. We're helping them. We're giving them education, all the way down to the really granular level. Like, how do you actually do this? How do you copy the Sailor playbook? And so today we officially launched. It feels good to have it out in the world, and there's been a lot of momentum, a lot of excitement. So, yeah, that was the big announcement today.
Yeah, amazing. So if you could give us a little bit more insight there, maybe for someone who's watching, who's maybe thinking of joining Bitcoin for Corporations, what are some concrete details? Like, what would you learn here? You're saying follow the MicroStrategy playbook, but maybe an insight or two as to what that looks like.
Yeah, definitely. So, I mean, obviously, you can watch the podcast, you can read about sort of what Sailor has done, and it's been incredible. But when you're at a company that's actually, we're ready to go, they're all right, cool, I got it. This looks like a good idea. We should actually do this. What are the granular steps? So talk to me about, the accounting nuances, regulatory concerns. How do I talk to my board about this, right? And so what we're doing is we have a masterclass. It's going to be a 7-week course. It's live instruction from some of the industry leaders, Dylan LeClair, executives from UTXO, from MicroStrategy, from some of our network leaders. They'll be teaching this class, and at the end of it, you can earn a certified Bitcoin advisor certification, basically. So, I think one of the first, that's backed by MicroStrategy, Bitcoin Magazine, the credibility of those two entities joining forces. So that's really exciting. The other part of Bitcoin for Corporations is membership. So if you're a company that is looking to add Bitcoin to your balance sheet,
right,
we are equipping you with all the tools, all the resources, and really just being a part of the network is really where the value is. Yep. So like-minded individuals, there's a ton of benefits. I mean, they're all listed on the website, but VIP events with Sailor, being a part of the masterclass, getting invitations to our flagship events, all sorts of educational content. It's really robust, but the big idea here is that we're joining forces with all the companies who are like-minded.
Yep.
And so, yeah, we invite you to join us.
Amazing. Speaking of companies like-minded or companies that are interested, Alan, you mentioned that you spoke with some companies here that are interested. We won't get into who they are, I get all that. But, a lot of people here at the live desk today, very sincerely commented on, this production is absolutely amazing. And I have to imagine that businesses that are seeing this, they take everything that, BTC Inc. and Bitcoin Magazine is working on just a little bit more seriously after seeing this sold-out arena today. Please tell me a little bit about what some of those conversations were like.
Yeah, definitely. So I can't name any names as much as I want to, but I think one of the coolest things right after George got off stage here at noon was immediately people were coming up to both George and myself saying, hey, how do I get involved? Or I'm interested in this. Is something I've been wanting to talk to about my peers, on the board, whatever board of execs, that they're on. And so the sentiment there was really, really great. And to kind of tie everything that George put together, the analogy I like to use, right, is there's these super apps that exist, right? So think of like Twitter that wants to be not only this communication platform, but also wants to be like a payment service, the one app that you go to.
Right.
And I think what we've really figured out here with Bitcoin for Corporations as a whole, right, is that MicroStrategy is coming in with this knowledge base and playbook and legitimacy as the big company who owns 1% of the total supply of Bitcoin.
Right.
And they're partnering with us, the oldest, most trusted source of Bitcoin news and education, and our connections And together, not only are we arming people who want to learn about how to implement a corporate Bitcoin strategy, but we're giving them the tools to go execute on that knowledge base. And then after that, they get a nice network of people that they can continue, spreading the word and, understanding what it means to really hedge, your corporate value, against the dollar.
Yeah, amazing. Do you think that just kind of capitalizing on that idea of strength in numbers, there's more people doing it, so now more people want to do it? Is that a big part of the strategy here?
Absolutely. And not only that, it's also just activating Bitcoiners right where they're at, right? Like we have a lot of people that come up to us, we work full-time in Bitcoin. They're like, that's my dream. I want to have a Bitcoin job. And I think part of the encouragement here is we want Bitcoiners to be active right where they're at, right? You work at a company, you have a certain level of influence. Talk to your CEOs, talk to your C-suite people about, adopting Bitcoin into their strategy, right? Yep. We don't have to leave and we don't have to all work at Bitcoin companies. It's very stressful.
Right. We know that well.
It takes a lot of years off your life. You get gray hairs, but we can be effective right where we're at. And so that was a big part of my message too, is that, we're on a mission and, we can do that right here.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.